and welcome out to our halftime report here on a very, very active day in the market today. Markets are selling off pretty aggressively across the board. Technology, energy, crude oil, you name it. There's a couple of areas showing some relative strength, but very interesting action out there. First off, we got a three-coach panel here today. Coach Noah, Coach Matt. Start with Matt. How you doing this morning?
Doing better than market.
There's no doubt. The market is absolutely a bloodbath right now. Blood on the streets. There's no doubt about it. How do you interpret this, Matt?
Fear. That's how I interpret this. Lots and lots of fear right now. I think Noah said it best in the pre-production here. Asset managers don't want to touch this in front of earnings.
I agree with that. Noah, explain that.
I was going to say it's merely a flesh wound. I don't know if it's a bloodbath. It's merely a flesh wound. I think
it reminds me of a Monty Python Holy Grail scene there, Noah.
Exactly. That's exactly what I was going for.
That tweet, I'm going to tweet that. I'm going to make a meme right now about that.
Merely a flesh
wound. Put your arms off.
The NASDAQ, it's flesh wound.
I think this is also not just fear, it's greed. You got bears selling into this. I don't think the street's panicking. I think you've got some profit taking and some short selling in here. It forces you to hedge. It forces you to take some bearish positions, pull bulls off. And so I'm not convinced this is going to turn into, panic, fear, mayhem, cats and dogs living together. There we go. We got to,
You're not going to Montana yet?
Not yet.
Okay.
But I do have my Montana militia currency.
You're ready?
Yep. I got my yep.
Okay, is that called gold? Is that what that's called?
No. They make their own currency.
I like it. Tim, I agree with no. I don't think we should wake up today and panic like the end of the world is happening. And the reason, when you're looking at that on the daily chart, the one thing I want everybody to understand is that daily chart looks absolutely nasty. That's why we went to a neutral condition, a week ago. But the simple reality is markets don't crash on a daily chart, guys. They don't. I will almost, and I can't say this, but I will almost guarantee we will approach those all-time highs again. Look at and Noah, what I want you to do is take a peek at that weekly chart for a second on the S&P, because whenever you start to see this volatility, this short-term volatility to the downside in a short-term trend, it is always wise to kind of pull up that weekly chart. And when you're looking at the S&P on a weekly chart, you are seeing something vastly different, just a standard type bullish retracement coming back down. And so I don't think we should, wake up and panic. Markets crash on weekly charts. They do not crash on daily charts. Right now, the sentiment is bearish. There's no doubt about that. Obviously you need to adjust your portfolio to match the sentiment in the marketplace. But at the end of the day, the S&P 500 is still on a weekly bullish chart. And you can't just, minimize that because of the last few days in the market.
Oh, yeah. It is a bullish retracement. If you kind of look at that perspective, you could argue that that's still in the channel.
Well, it is still in the channel. Long-term trend is definitely important. Markets are under some pretty severe pressure, though. This sell-off came on not a lot of news, guys. PPI report came in line with expectations. You have, I guess, the hurricane hitting the Gulf Coast, but we've gone through that before. You have quite a bit of volatility from the opening price as well. And so a lot of this selling, I think what you guys are describing is 100% accurate. Institutional investors and the money managers on Wall Street and around the world, they just are dumping stocks in front of this earnings season, Matt. You were talking about, this anticipation, maybe corporate earnings are down because of tariffs and trade. We don't know yet. We haven't got a lot of major earnings news yet. So they're hedging and they're actually unwinding in front of that.
I said this yesterday, and I'm going to keep saying it because it's important. Coming into this earnings season to me is very, very, very vital. And that's what you're seeing with what Noah was talking about, with asset managers not wanting to take the risk in front of this earnings season. We all know that the trade tariffs are going to impact U.S. stock prices at some point. We know that. We had not seen that in the data. The central bank, Jerome Powell, gave a speech on that just 2 weeks ago, where he's like, yeah, I'm hearing from CEOs of major corporations how they're concerned about this, but it's not being reflected in the data yet. And so a lot of what's happening here is these asset managers and investors around the world, they're saying, okay, yeah, we haven't seen it reflected in the data yet, but people are growing concerned about this. And just in the last 2 days, Tim, we've had two minor earnings announcements, one from PPG and another one, I forget the other company off the top of my head. But both those two earnings reports reflected a fear of that trade barriers and increasing costs from a basic material perspective. And so this is going to have an impact. And because it's going to have an impact at some point, people just simply aren't willing to take that risk coming into the earnings season. And that's why I feel like this earnings season is so vitally important for that Santa Claus rally that everybody kind of expects to happen coming into the later 2 months of the calendar year. Are we going to get that? I don't know. I'm waiting for the earnings announcements the same way the asset managers and the hedge funds and the professionals out there are doing. I don't think it's wise to get in front from a buy side in front of the earnings season this year.
Yeah, I agree with that. No, give me the actual market skyline over at Tackle Trading. I want to take a look at a heat map. I think the visual of the heat map is very important here today. Kind of obviously it's what a lot of people are feeling, but you're going to see a lot of red.
Well, you're going to see what Noah said it wasn't, a bloodbath.
Oh, yeah. Well, it's merely a flesh wound.
Spilling blood out of his arm. But no. It will show red today, obviously, because the market's getting beat up. But again, it's not a complete bloodbath across the entire marketplace, Tim.
I agree with that. Look at utilities. I mean, you have money going into utilities and some healthcare and consumer staples and goods. Philip Morris, Altria, Procter & Gamble, Johnson & Johnson, and the defensive areas of the market. Classic rotation, Matt. What's important about it is the size of some of the boxes that have been down. I was saying this in our pre-production meeting where Apple Computer down 1.3%. That's relative strength. By the way, it's now down 1.6%. To me, Apple Computer is holding this whole thing up from really spinning out of control, in my opinion. I think if Apple broke down here intraday into the close, you could see the market end up another 1 or 2% down.
Let's look at the intraday chart on the NASDAQ very quickly.
I think technology is the story of the day.
It's going to be the story of the month. Okay, all the gains that have been happening in the tech sector, those high growth stocks, the stocks that have had bigger PE ratios out there, like the Googles and the Amazons and whatnot. But if you look at the NASDAQ, not on the daily chart, it's going to look the same thing. But if you look at it just on a 15-minute chart here, Noah, I want to show some intraday action. Now, as you can see, you're coming down from an intraday perspective. You're coming down into that 7,200 handle. That 7,200 handle is very, very important from a technical perspective. If the market, it's only 27 points away right now with the NASDAQ down a whopping 172 points. Tim, you asked me before we got on to the pre-production when the NASDAQ was going back up, and I believe it was at 2752 at the time.
7250.
Is this the intraday buy signal? And I said, no, it's not. Because all the pressure is to the downside. The intraday buy signal was above 70. I believe it's 7260. But in terms of the sell signal here, Tim, and again, now you're 24 points away. The sell signal, if you get underneath 7,200, that thing could scream down. Okay, but one caveat to that, and we've seen this over the last 5 days in this sell-off. The market sells off aggressively in the open. It slows down in midday, and then we've seen that ramp coming into the last hour of the day. We've seen that consistently in the last 5 days. So to me, this intraday close, the same way it was yesterday, is very, very important here. If you see 7,200, that to me is a sign that the market is slowing down. You might be able to get some good day trading opportunities if that holds and starts appreciating coming into the close. But keep an eye on 7,200. That's where my eye is at, and that my eye will be glued on 7,200 until the market closes at 4 p.m. Eastern Standard Time.
Yeah, I agree with that. It's 1240 on the East Coast, 940 on the West Coast, and you are right at lunchtime for New York traders. At this time of day when the markets are down big, you tend to compress, Noah. It's part of the intraday trading cycle.
Yeah, those traders aren't taking a lunch break today, though.
They're not taking lunch today. There's no doubt.
Yeah, they are. They're just ordering takeout.
Yeah, they got Uber Eats,
something like that. Yeah.
No, what's your read on this intraday? I mean,
just that exactly what Matt was describing. You got that slowing momentum pattern right there, and it's just like you saw back here. It runs down hard, slows down early in the morning, and then by midday, it's rallying back out. I wouldn't be surprised if we saw a rally, but Matt's right. If it breaks 7,200, that's a big zone. And I was looking at when we first looked at it, the daily chart. This is kind of how I looked at it, Matt. We had this old support resistance zone, and there's that little doji. The market's like, oh, it's supposed to bounce here at 7,400. And if it does, great, the market's off to the races. But if it breaks down, that creates a lot of selling pressure. Same here at 7,200. If we see the market slow down and hesitate, because that's again, that's a known buy zone. It's a big number. I think the market will, pause here and wait. And if you see the buyers come in, you might see a little bit of courage step into the markets. But if that zone breaks, I think it just forces people to continue to sell.
Yeah, I agree with that. I think it's 50-50 at this point coming in the halftime of today's price action, whether or not we see price appreciation off that 7,200 or if we see that 7,200 handle get broken. I will tell you, though, if that 7,200 handle gets broken, the probability shifts to the downside.
There's no question about that. And obviously, we're going to be watching that throughout the halftime report here today. A couple hours left in today's trading. I don't think that we're at a panic state. You should never panic in the market, guys. If you're panicking, you're doing something wrong. We're not at a panic state in my estimation.
Can I also say one thing, Tim, and then I'll let you finish there? If you don't have bearish trades on over the last 2 weeks, you've also been making a mistake.
You've been missing
You've been missing a lot of opportunity to offset some of that bullish risk.
Most active stock on the NASDAQ here today is Microsoft. It's got the most trading volume. Microsoft was set up perfectly for a pivot trigger, and it just absolutely did not come through, and the whole market coming down. Noah, do you just see this as market behavior, or is Microsoft potentially spinning its trend here?
I think it's a lot of it's mechanical, because I mean, anybody who came in and just like we were talking about on the S&P, I thought that was a really good looking setup too. That usually gives people enough courage to come in and buy. And then if it changes course, it starts hitting stops. It starts hitting mechanical stop losses. It becomes kind of an automatic response for traders. If those key support levels break, they just go into selling mode.
Yeah, I was one of those. I was one of those victims to the stop hunt of the market today on Microsoft.
Yeah.
Oh yeah, absolutely. And so it becomes, and that's why I always kind of scratch my head a little bit when I read the headlines. Like, market down on concerns, over tariffs, whatever. It's down because people were selling. Sometimes it's not because they want to. Sometimes it's just because stops get hit. Sometimes it's,
I didn't make a choice to sell. My stop got hit.
Mm-hmm.
So you're part of the problem.
I was part of the problem on Microsoft today. Yeah, I believe that.
Top loser on the NASDAQ today is Netflix. It's down 6%, guys. I mean, this stock is breaking major support zones in terms of that 350, 340 level. It's even selling consistently. You got a 200 period moving average coming up at 325. Netflix has earnings, I believe, next week as well.
Tuesday or Wednesday?
I think Tuesday.
Tuesday or Wednesday?
Yeah, the 16th.
Yeah, that'd be Tuesday.
No, give me a read on this Netflix chart.
Just that you got the lower highs. That 200 period moving average, I think, is going to be a big number. It also coincides with that old support zone. So you'll see prices slow down, and there would be my estimate. But then with earnings coming out, that all bets are off. By next week, new information will change the outcome. So from a technical perspective, you can see a nice little pretty kiss goodbye right there. Again, a little bit of typical volume. It's already at typical volume, and we're only at midday. Mm-hmm. So I think you'll end up seeing some heavy volume on that. And then I wouldn't be surprised to see a reversal candle, at least an attempt to hover at that, because it's a double whammy. It's a support zone and the moving average. And whether traders are focusing on support or focusing on the 200 period moving average, they're both wondering whether or not that zone's going to hold. So I think it causes the would-be sellers to wait for confirmation below it. And then maybe some buyers come in and, they'll step up and start buying. But I think it's just enough to slow it down, and then it'll entirely come out to what happens with earnings.
Go back to that heat map for a second. I want to get Matt's take on something. Matt, we've been seeing the U.S. markets hold up relatively strong for a long time. And in the face of that, we knew that world markets and global markets were under pressure. You're now seeing selling in the U.S. markets. Noah, click on the world market here. But Matt, we sold hard in China. We sold hard in Europe. Everything around the globe kind of came into today with all of this pressure kind of pent up and built up. Do you think maybe there's a scenario here where the U.S. is just moving into the downtrend that the rest of the world has already been in for 6 months?
Well, we see these things, happen all the time where, one goes up, one goes down, and then over time they come back in. right? They come back in line with one another. And you've seen the world markets really kind of get hit over the last 9 months versus the US markets that have been going up. And so, yeah, there's a little bit of them coming back in line. Does the world markets come back to the US markets, or does the US markets go down to the world markets? What you're seeing this week and, later on last week is you're seeing the US markets come down to match kind of what the world markets are doing. There's a lot of emotion out there, guys. But I'll tell you, though, there's a lot of similarities to what was happening in January and in March of this year. There's a lot of similarities there. And if you'll remember, in both of those instances, the market responded off that 200-day moving average very aggressively back to the bull side. Okay, so that's something to keep an eye on in the NASDAQ, in the S&P 500, and not so much in the Dow, but in the NASDAQ and the S&P. But guys, that 200 is not a guaranteed buy zone. Okay, look at the Russell 2000 today. That didn't care one iota about the 200-day moving average.
No.
It did. It slowed down. It paid it attention, got a small candle in there, and then it just blew right through. Mm-hmm. So, yeah.
Yeah, I've been very bearish on the small cap stocks anyways, and they're going to continue to get crushed, in my opinion.
Well, the RTY has been the worst performer, Matt. And I think that's kind of where the thought is. Other stock areas, whether it's small caps or China or Europe or global stocks or Brazil, they've been in downtrends and showing this weakness now for a while. We're now just seeing it in tech in the S&P 500 and the Dow. I don't know. I'm with you guys. I'm not in the mood to panic for sure, but I think you got to respect this selling. There's, like you guys are saying, you have to respect it. You have to hedge it. This is not a day to make new long entries, is it, Matt?
No,
it's not.
Are you at the point where you want to sell puts yet?
Ooh, maybe
increase in volatility.
I mean, you are getting a volatility spike. That's
those credit systems are kicking ass right now.
Yeah, they could be.
You gotta love those credit systems. Finally, we've complained, and you gotta love the marketplace, right? From 2012 until 2017, anybody that sold puts and calls and cash flow systems, all they ever did was complain about volatility.
Sure.
And finally, volatility is back, and they're complaining about direction. They want their cake and they want to eat it too.
Careful what you wish for.
Come on.
Yeah, I agree with that. All right, give me the Dow Jones because.
I thought you were going to say the VIX. I was just prepping myself up for a VIX rant.
Wait! Before you throw up the VIX, let me guess. It's up.
It's up.
Okay. I just wanted to make sure that we had that detailed analysis on the VIX. It's up.
Let's take a look at the VIX. Let's see where it's going to today.
18. That's not that. I don't think that's high considering the size of the sell-off.
If it was panicking in the market,
the VIX is broken and you should never look at
it. Tell us how you really feel, Matt.
It's a worthless, pathetic indicator.
So lovely. All right. Well, I mean, a close above 20 though would be the first time it's in that range since the selling in January and March, man.
Let me ask you one sincere question to both of you. Are you changing your protocols, your processes, your trading rules if the VIX closes above 20 versus what the market's doing?
No, again,
right,
it's like the analogy we talked about many, many times. Let's look at the Dow before we move past all the indexes. Now, again, red candle breaking support, slowing momentum, everything we talked about yesterday, Matt, but you are still above the 50-period moving average. Do you still see relative strength in the Dow?
I see relative weakness in everything right now.
Me too. Yeah.
It's just a matter of, So the Dow's doing a little bit better, but okay, let's play this relative weakness, relative strength game. So let's look at the S&P real quick there, Noah.
Mm-hmm.
Okay, so yesterday the S&P 500 was hanging on the 50-day moving average, correct?
Yep.
Okay. Now, today it obviously broke. Now let's look at the Dow. Today, the Dow hit the 50-day moving average. If this market sells tomorrow, that is not going to play one iota in the role of stopping that market from coming down.
Yeah, a lot of these are classic rotation signals. Small caps did it first, now tech, then the S&P, then the Dow. I'm with you, Matt. I see weakness across the board in the short term. Now, these are daily charts. On the weekly chart, we have to remember, guys, we're within just a few percentage points, 4 or 5%, depending on the index, of all-time highs. So again, and we have not started earnings season. I don't want people out there in hashtag halftime crew. That's why you come here. I don't want you panicking, but I want you cautious. I want you hedging. I want you prepared and making sure you're applying money management discipline and rules. In one area, Matt, I thought was set up very, very well for a rally would have been crude oil. You've got this hurricane thing happening in the Gulf Coast, which, pray for those people down there in the Panhandle.
Yeah.
I guess
we have a lot of friends, a lot of colleagues down in the Florida area. And you guys are all in our thoughts today, and keep safe, keep safe, keep safe.
Why is it that crude oil is under pressure here? Because in my estimation, you have risk of, supply disruptions. You have fundamental risk there. Is it just that asset managers are selling anything right now?
40% of all Gulf oil production is shut down right now, Tim. 40%. That is massive. That's not a small number. That is an absolute massive number. Oil should be absolutely crushing it today. But it's not. It's not showing tremendous weakness either, but it's not doing much. The biggest problem you have here is the IMF yesterday. The IMF yesterday came out and downgraded the world economic condition. They downgraded their GDP projections from 3.9% to 3.7%. And when the IMF downgrades global growth, that immediately becomes concerning for oil.
No, this pullback into the 73.36, I think is where we're at right now. You've got a rising 20-period moving average. You have violated one old resistance zone, but not another one.
Yeah, that is a weak sauce one, though.
Yeah. Do you still see it as a bull retracement setup?
I think it is. I wouldn't trigger until it took out that 75, 20 some odds.
I think we lost Noah there real quick, but Tim, can you hear me, Tim?
I do. Yep.
Okay. Well, let me reiterate what Noah was saying. He was saying either one, it's got to go back up above the intraday highs, right? And that's where he was looking at 75.25. Or two, and this is something I also want you to keep an eye on. As this market comes down, it's currently at 73.34. I still see that 72 handle as a more important support level, and the rising 20 is a more important support level than that, short-term pullback that it was having. So I do think you might get a really good signal somewhere around 73 with a doji, then an upward movement in price off some, inside candle tomorrow or something along those lines. So you're either one, you're back up above the intraday highs on oil, which would be a good trigger, no doubt about that. Or two, you're looking for that to slow down somewhere around 72 with an inside candle upward movement in price. And then that could be a potential trigger on oil as well, Tim.
Yeah, I'm with you. When you're looking at your account and everything's down, usually you're going to push the sell button on something you want to unload as well. They did have the oil supply numbers that came out today, Matt, and also with that hurricane, you would have thought maybe we could have got a rally in oil, a little rotation, but I think the market's just under too much pressure. When you have that much selling in stock prices in the NASDAQ and other areas, obviously you're going to have continued pressure even in commodities. You take gold, for example. I thought gold would rally today. It's flat to down. This would be a perfect day for a safe haven type investment moving back into gold. And it just
think about what Pete said though on the podcast, right? When he was talking about, how gold, when I asked him the question if gold has lost its safe haven status, and he said, Matt, and I'm paraphrasing here obviously, but he said, Matt, when people decide to sell, they decide to sell everything first. And then they start picking things up along the way. And I just thought that was such wise, sage advice from somebody with so much experience like a Pete Thomas. And that just, again, anytime we bring him on the podcast, I learned so much from Pete. But, it's important to listen to people like Pete in those environments who have seen these conditions for 40 years. So when everything starts going, they sell everything. It's really what recovers, recovers faster.
Yeah, and I think we have lost Noah here, so I'm going to stop his video real quick.
Oh, I kind of like him frozen.
I don't mind him frozen. I don't
mind that actually.
Let me drop him to attending and see if you can you take over that screen share there, Matt?
I'll figure it out while you keep talking.
I think if you try, let's see here. And Cody, come in and make Matt the host, I believe. Then he can supersede.
Oh, there we go. Matt's got it.
Yeah, there.
I was working on it, but yeah, he's got it.
And welcome out, Halftime Crew. We're talking markets on a day where everything is down. NASDAQ's down.
Including Noah's internet.
And the internet, short Comcast again. We've been saying that for a long time. By the way, we were laughing about short Logitech with your mic the other day. Logitech's down another 5% today. So, or 5% this week, I should say.
Yeah, most things are down.
Yeah, it's getting crushed. LOGI, interesting. The Russell here, Matt, I've got some, I want to spend maybe just 1 or 2 more minutes on that Russell before we move past it. You had the chart up. 1600 was key, and we're sitting right there. I know for a fact, I know traders who have bull puts way out of the money. Would you be hedging or doing something with this right here?
Yeah, it depends on your entry. I mean, there's so many different entry points here. For somebody who entered into a bull put up here, yeah, you better have done something already, right? If somebody would have entered into the bull put on this little upward movement price off that support level, probably not yet. I mean, on those Russell 2000 condor systems, you usually have about 160 to 180 point range on those things. Usually, I mean, you got 10% minimum range, especially on the downside. So if you entered into it here off this support level, then you're all the way down to around like 1450, Tim. And so if I entered into that bull put spread at any time over the last week, no, I'm not hedging that. But if I would have entered up here, you should have hedged it at this point. Yes,
I agree. I mean, when it broke 1640 right in there, I think that you had a hedging opportunity at 1600 here, already down 2%. I would probably not hedge it today personally, but I would wait for more clarity from the bank earnings on Friday. If I still had 150 point window or range, I would be a little bit patient with this one here.
There's a thing called probability of touch versus probability at expiration, correct? And when you look at probability of touch versus probability of expiration is based on the probability of something that will expire there, right? In the money, out of the money, that type of thing. Probability of touch is a higher probability that your strike price will get hit at some point, but the market might not stay there. When we originally did the research for cash flow condors in 2014 and 2015, we had launched it in 2015. Basically, there was only 6 or 7 times in the last 360 months where the market had depreciated more than 10% and stayed there. There were a handful of times, many more times, that it had touched it and then recovered here. The market is obviously extremely overextended to the downside here. There's no doubt about that. The sentiment is bearish, the mentality is bearish, the headlines are bearish. But I just want to say one thing, markets don't always go down. Even in bear markets, they do go upwards in price. And it wouldn't surprise me to see a little bit of an upward movement in the Russell 2000, just purely on profit taking off shorts over the last couple of weeks. I've had a bearish rating on the Russell 2000 for about 3 weeks now. I expect a retracement at some point here. I thought it might happen off the 200-day moving average. That never confirmed. So obviously we're still coming down here, but I wouldn't hedge anything on that condor system unless you're starting to approach being in the money, or your delta on the short strike is somewhere around 0.40, or you're maybe within 1 ATR of your strike price sold. At that point, then you got to make some decisions. But if your delta on the short put on the iron condor system is say 0.25, you're still okay. You're still okay. If your delta is still 0.3, maybe you get a little concerned. But anything under 0.40, I think you still got to stay with the plan.
Yeah. Let's look at the dollar, Matt, with the chatter out of President Trump about the Fed, raising rates, not liking it. The dollar is starting to show some weakness here. I did see a PPI number here today. It was one of the most important economic data points, came in line. But I think the expectation is the Fed's just going to be aggressive moving forward with interest rates. The US dollar is pretty flat for what you would expect here. But at a high point, resistance. Are there currency potential setups here that you would play?
Well, I mean, we'd have to do a deep dive into it, but yes, I mean, the dollar is starting to show momentum to the downside, forming that retracement that we talked about over the last week here. I think there's going to be a good buying opportunity on the dollar in the short term. Okay. But with the dollar coming down, you might want to go look at some of those cross pairs, that are not including on the dollar. There's still some very good opportunities out there. this whole market's volatile and a little bit uncertain. And the advice I'd give to every trader, not just new traders, but veteran traders alike, is in times like these when the fear does increase in the marketplace and the uncertainty increases in the marketplace, and you're in this what do I do now mode, right? Which every trader, and I don't care how much experience you have, every trader right now is looking at this saying, what do we do now, right? Mm-hmm. Every trader is saying that. And so if you're in that mode of, man, I don't understand exactly what's happening here. Let me ease your concern that that's everybody in the market right now. They're all looking at this saying, is this something that is bigger, or is this something that we're repeating that we saw in January? Is this something we saw in March? Is this something that we saw in the summer of 2016, 2015, 2013, so on and so forth? So, or is this something bigger like a subprime market crash? So everybody's kind of in that zone. I don't think we're there yet, right? I don't think we're there yet. But what I will suggest to everybody is in these times of increased uncertainty, you got to lower your position size. Mm-hmm. You got to lower your position size. You got to be much more conservative on your entries. You got to be a lot more conservative on your strategy selection. You have to play with what the market is giving you. And right now, the market is giving you a whole range of uncertainty. And for new traders out there, you know, it might not be a bad thing to kind of sit on the sideline for a few weeks to let the volatility subside. For me, I look forward to the close every day in this market, Tim. That is the number one thing I look forward to in this market condition, because every time we've done this, and let me look at the S&P real quick here. Every time we've done this over the course of the last few days, we've seen the bottom and then quick price appreciation coming into the close, Tim. You're at the bottom on the S&P 500. This is a big, big, big red candle, no doubt about that. But if I drop this down to a 15-minute chart, you know, we were slowing down here, starting to pick up steam to the downside. But if you start to see this price appreciation come back up, Tim, a simple hedging strategy to offset some of that bearish risk is just an intraday day trading, you know, on the ES or the YM or the NQ or the RTY. It's not happening so far today, but keep an eye on that last hour in the market. If you see price appreciation coming back up, there's some really good day trading opportunities in that last hour.
You know, we got 3 hours till the bell, so there's a little bit of time left to have that happen. The NASDAQ is now approaching that 7,200.
Not to interrupt you.
Yeah.
Approaching.
I agree. And I got to tell you, a break below here would be very fascinating to watch. The volume right now is very, very light in the market, but don't let that fool you guys. Volume is always going to spike in the middle or at the beginning of the morning. And at the end of the day, it always lightens up midday. That doesn't mean that it cannot spin out of control here. And we are sitting on 7,200 as we speak, Matt. A lot of stocks I want to talk about today. We got banks that have earnings coming up on Friday, Matt. The financial sector, and let's look at the sectors, a couple of them, not all of them, but there are some areas I want to talk about. XLF with rising interest rates, and you would expect some pressure here. I've seen quite a few of the banks in the news here today. JP Morgan, PNC Financial, Wells Fargo, Citigroup. There's weakness in financials. That's a head and shoulder type pattern showing terrible weakness. What do you expect from the banks during earnings season? They lead us off here.
I don't expect anything from anybody in earnings. Mm-hmm. You should never come in with a bias one way or the other with earnings. You should have a neutral condition coming in and play bi-directional. Mm-hmm. You know, I mean, again, what my expectation or what I will do is after the banks announce, make an assessment based on that. But I mean, I'm not going to come into here and say, oh my goodness, the market's coming down. Bank of America and Wells Fargo and JP Morgan and Citibank and all those banks are going to get crushed on earnings. We don't know that. Yeah, nobody knows that. You never want to come into earnings with a bias one way or the other.
I agree. Real estate XLRE on CNBC this morning. It was interesting. I hardly ever watch it, but when the market's,
I was going to say, if you haven't watched them, don't watch them anytime soon. They're terrible.
They were talking about real estate and how buyers and sellers can't figure out pricing right now. You were mentioning the other day that in some regions, real estate's been very, very strong. This is a bear retracement setup, but Matt, on a day where the market's selling, that I would have expected, a lot of areas to sell, but real estate's holding up relatively well. Anything to see here?
No, I wouldn't buy this with your money.
Not buy it. Would you sell it short?
No.
On that pivot? Yeah, kind of in a mixed bag here. Utilities, XL.
Hang on, before you move on, I want to add something that I heard they were also talking about, which to me just blows my mind. Banks were talking about how consumers don't like seeing that 5% fixed interest loan. So the number of variable interest rate loans is going up rapidly. So going into an increasing interest rate environment, people are getting variable risk loans versus fixed risk or fixed rate. And it's just like, oh my God.
Who's doing that? Consumers?
Consumers are doing that.
The consumers with confidence of 134, the high consumers, the Elon Musk high consumers, they're taking variable loans off high-end homes at the top of the market. Yeah, that's going to work out real well.
Just wanted to throw that in there with the real estate.
Consumers think about their monthly cost, right? And so if they can lower it based on, they'll get into
consumers are going to get their house taken from them in 2 years.
It very possibly could happen. We've seen it before. As the market is moving here, Matt, at this point, I'm watching these intraday charts, and I got to tell you, I'm going to be glued on that NASDAQ 7,200. To me, that is something that you have to keep an eye on. I know that,
it's the only number I care about in the market today, Tim.
I don't really care about anything else. There are other charts that I care about. Apple Computer is one of them. I look at the overall NASDAQ, Matt, Apple Computer at 222. That 222 level is very, very significant, in my opinion, on the intraday for traders. 220, though, is more significant for Apple. Apple's held up tech, and it's no different even right now, by the way, guys. You might think, well, Apple's down, everything's down. If Apple broke down, over the next day, 2 week, or whatever it might be, you lose Apple, I think you lose the trend in this market, Matt.
And you might lose the market.
Yeah. I agree with that. You've already lost the trend in Amazon. I love that stock, obviously, but it has.
Hold on. You've lost the trend in almost everything out there, not including Apple. And I know Microsoft's down today, but this trend is still kind of intact on Microsoft.
Yeah.
So, but in almost everything else, CRM, Netflix, Facebook, Amazon, every stock that was one of those bull stocks that was holding the market up, you've lost those trend lines.
That's right. And I'm looking at Netflix breaking down. We talked about it. Google, we've talked about the weakness there. That pivot at 1200 was beautiful. Breaking down today, Facebook down at 155 at the low. It was, in fact, that 155 is the lowest level we've been since March when it sold aggressively on that, data breach news and whatnot, just showing tons of weakness. It's Apple holding this market up, and 7,200 on the NASDAQ intraday. We'll see. It's going to be interesting.
I'll tell you again, I know I keep harping on this NASDAQ 7,200 handle, but you saw it just briefly, just for the last, let me switch it to a 1 minute chart here, guys. You kissed it here and look what happened. 5 minutes later, you're up 20 points.
No, and traders are going to rattle that thing back and forth. Now you've got an intraday range here, 7,250, 7,200. It's pretty tight, but I'll be watching that kind of as we head into the close.
It's almost a 1% range on the intraday. That's good day trading opportunity.
I agree with that. And by the way, welcome out halftime crew. And I know it's a big day on Wall Street. And there's all kinds of opportunities out there. You guys are doing
a bad day for traders.
No, it's a good day for traders. Traders are taking, they have opportunity. There's volatility. There's movement. There's action across different areas, including commodities and stocks, Matt. It's becoming more of a trader's market, in the last month or so. You got to remember, there were years where the market was pretty boring during this last 10 years.
This might make me sound like a greedy Wall Street trader, but it's presented tremendous opportunities for both buying and selling, swing trades and day trades. And professional traders never just buy things, guys. They sell things.
I agree with that. Yeah, you have to have bull, bear, and neutral, all kinds of different things that you play in your trading systems. There's a lot of stocks on my mind here, Matt. What's on your mind in terms of some of these companies? Are you looking at anything for entry points today? Or are you just
not on individual companies?
Individual companies. No. I know there was some weakness on Weight Watchers that we talked about recently. WTW, bring that chart up if you would. It's been on the options report as well. And actually, now look at that intraday, actually rotating back up. That broke below support here today, and I've been waiting for that. I have not pulled the trigger because on a day like today, I day trade, I hedge, and I adjust. I don't really make a.
Well, Tim, let me explain one thing before we look at Weight Watchers. Yeah, it did recover, and it did the exact same thing that I said on Wayfair when we were analyzing the Wayfair trade. Mm-hmm. And I said, if you miss the break, watch that intraday retracement come back up into the breakout channel. And then look what happened on Wayfair. It's down $10 since in the last 2 days since we analyzed that on, I believe it was on Monday. So looking at Weight Watchers here, you're looking at a potential break, intraday retracement back into the breakout channel. What happened to Wayfair? Got crushed in the next 2 days. This to me is not a buy side. This to me is, if you miss the break, you might have an intraday retracement coming back into the breakout channel, downward moving in price off confirmation. I see that as an entry point to the downside.
Mm-hmm. Let's take a look at Boston Scientific, which I really did like the pullback on here, and I just still like healthcare.
Can I ask the halftime crew something?
Yep.
Guys, when we're looking at that breakdown on the daily chart, but then we break it down into the intraday to help you understand from the intraday perspective, does that help you understand multiple time frame analysis? Because that, and Noah, I want you to speak about the importance of multiple time frame analysis.
Yeah, absolutely. In fact, I'm glad you brought up Weight Watchers. We actually looked at that one this morning in the Traders Lounge. And we put a little momentum trade on it with trail stop on the breakdown. But that multiple time frame analysis, I think it's really valuable for a couple things. Trade identification and for triggering is what you primarily want to focus on, is triggering and putting in those entry and exit points. That dropping it down a time frame gives you perspective. Mm-hmm. You called it right on. If you look at that chart intraday, that is about as good looking as a bear retracement, as you get. And it's a good entry point. So if we start to see continued pressure, because again, the daily context is pretty obvious that we're breaking support there. So that's a good context to be in. And if you've got a nice daily context, breaking it down into the intraday chart just helps you improve your entry and exits.
Yeah, and just as a general rule of thumb, you don't want to enter into a bearish trade when it's already down 1-2% on the day, right? Mm-hmm. You don't want to chase that. So if you miss the break on your trigger, simply wait for that intraday pullback coming back into that resistance channel, or that old support now resistance, and then you trigger it based on confirmation. And that's just something that, Keith King, the great Forex trader and commodity trader and mentor for Legacy out of Boston, that's something he preaches every day. I mean, when you're day trading, you analyze the trend and the pattern on the 15-minute chart, but when you're triggering, you drop it down to a 5-minute chart. When you're looking at swing trading off the daily chart, you get your trigger off the daily chart. You get your confirmation off the daily chart, but then you drop your trigger down to the 15-minute chart. It's just a good technique.
And this is something I learned early on, Matt, is to use ATR as a gauge. Like the ATR on Weight Watchers is $3. And from the open, the high today at 65.49 and the low of 62.44, that's 3 points. It's already dropped down in ATR. So I'm not surprised to see it rally after it dropped 1 ATR. That's kind of the expectancy for your day traders. So it drops down 1 ATR. They're hitting their targets. They're closing because they reach their objective. So ATR is a gauge. I don't want to enter a trade if I'm using a kind of a day trade trigger if it's used more than half of that ATR. That's
a great point, Noah. Especially using like when I was talking about the percentage movement, a better indicator is your ATR. There's no doubt. Great point, Noah. So pro tip, guys, if the ATR says $2 and the stock has already moved $2, that's not the best time to enter. Wait for that pullback on the intraday and then enter into that. Great point, pro tip by Noah. Emily, I want to answer Emily's question because she asked a very, very good question here. Is the entry, when you're doing this intraday technique, when the market's already went down too much, or by the way, it works the same way on the top side if it goes up too much too. So if you miss that short signal on the daily candle, the short is not underneath the low of the day at that point. Well, let me rephrase. The trigger is not the enter underneath the low of the day. You got to break this down like a bullet, like a bearish retracement on a daily chart. Big candle, big candle, big candle, inside candle, down underneath that level right there. So I would not wait for the price to get all the way underneath the low here. Breaking this down from an intraday perspective, I'm looking at this slowing momentum right here, and then the lows of the candles and the bodies at 64, my trigger would be under 64.
One of the best stocks, I think, on the stock report from the past weekend for these setups, Matt, is very similar to what you're looking at, is BTU. And no, I think you did that stock report this weekend, right? You were looking at BTU as one of your potential setups. If we look at the daily chart, you'll see a breakdown on the daily. And what is the ATR on BTU here?
ATR on BTU is 1.46. It's down 98 cents so far from the peak. 30, we'll just say the high of the day is 35.80. The low of the day is 34.39. So you're talking somewhere around $1. Would that be $1.41 high to low? So you're in line with what the ATR is.
Yeah. See, there's entries on the upside and the downside. And what you were saying earlier, I just want to reiterate it to our halftime crew, guys. If you watch the way a professional trader breaks down their picks and their watch list, they always have a bull watch list and a bear watch list. And Noah, there were quite a few stocks on your report from the past weekend. BTU is one of them. ENB was another one, Matt, bear retracement pivot as well, that I like the setup on. Noah, today, obviously bearish, and you've got plenty of triggers, but you still got to apply your rules, right? You can't chase stuff down, correct?
Yeah, absolutely.
Yep.
Hey, there's a good conversation happening in the chat, and I want to get both of your takes on it. Jasmine, who is a great pro member over there at Tap Train, great team member, halftime crew, comes here every day, supports everything we do. Love you, Jasmine, for everything you bring to our team. Jasmine talks about she has a difficult time triggering into short sells, okay? And I've seen this with a lot of people, not just traders and consumers, but just everybody. They have an easier tendency on the buy side than they do on the downside. Let's speak to that because I think it's important.
Well, I mean, is it psychologically triggering or are you actually getting filled because they move a little bit quicker? Probably the psychology, Matt.
I think it's psychology.
Yeah.
I think that's only the case, Matt, until they get a taste of the blood.
Till they drink it.
Once you get that greed, baby. Once you really feel the greed, I find the opposite. I love triggering into bearish trades now. But when you're new to trading, it's counterintuitive to people. They're always looking for the companies to go up, and they're afraid of that downside until they get a taste of it. Because it is, I love a bear market. It's kind of strange, but give me a bear market any day.
But no, would you agree that with people that have been around for 5, 10, 15, 20 years, right? That almost to a T, they prefer bearish conditions?
Well, I think the psychology of the market and the mechanics become cleaner. It happens faster. And so your ability to, pull the trigger on trade and make some money, I think it's easier in the down market. People are more predictable when they're scared.
I think Rob has a good point about it, Matt, that it's just unfamiliar to most people in their life.
Well, but it's not. It's not. They do it all the time. They participate in all the time. When they go get a loan at a bank, they're participating in shorting conditions. When they buy a stock, they're participating in it. They literally participate in the art of shorting every day.
Yeah, it's like the old infomercial example, Matt, where we talk about the mechanics of the infomercial company that sells direct to the public versus the big warehouse company. They do a short. They start with the sell first, and then they buy the product second.
Shorting stock is the same thing as borrowing money at a bank or buying something from an infomercial company, and quite frankly, buying things from Amazon. They do it every single day of their life, but the only difference is they're on the buy side of it versus the sell side of it. Who keeps all the money at the end of the day in every financial transaction in the history of mankind? It's not the buyers, guys. It's the sellers. That's who keeps it. And think about it like this, guys. Everybody participates in the buy side. We all do. You do, I do, everybody does. Consumers do, everybody participates. Everybody makes more money in bullish conditions. Not the truth in bearish conditions. Only a select few traders know how to make money in bearish conditions, which means it's easier for us to make money in those bearish conditions. And I do understand the psychological barriers that we have because we're not taught these types of things in any capacity. But you got to overcome that because bearish conditions happen all the time. They don't just happen every 8 years. There's bearish conditions in every stock market, in individual stocks, in commodities, in currencies, in bonds, you name it. There's bearish conditions in every single capacity. They don't just happen every 8 years like the market likes to believe. They happen all the time. Embrace it. Trading bearish conditions and learning how to trade bearish conditions will put you in an echelon of society that you did not know was probable in your life.
Well, let's be frank. A bear market is a transfer of wealth.
That's all it is.
When you get into a true bear market, it is a transfer of wealth. The money doesn't disappear. It just changes hands. the market just reallocates it from the folks who don't know what they're doing into the hands of the folks that do.
And that's why traders like bearish conditions.
I agree with all these things, which, by the way, just a quick drop. Is there a more appropriate day to have our monthly mastermind group for our bear market survival guide?
No,
I don't know if we could have timed that better, gents. I gotta tell you.
It's a great time.
I mean, that's the reason why we have that mastermind group and that team, Matt. And to reiterate both of your points, by the way, if you guys ever and these are very popular on almost any investing website, you'll see a list of top gainers and top losers for the day. Just look at the percentages. The top gainers are always a little bit lower than the top losers because markets go down much faster than they go up, which is why traders tend to like those downside conditions. Very interesting here today. Nike, Boeing, Visa, Microsoft, and CAT are the biggest Dow losers today, by the way, Matt. Give me Boeing real quick. We've talked about it a lot. It's one of my
I love the downward movement on Boeing. I love it. I love it. I love it. I'm excited for it. I am.
I talked you to buying some today.
That's technical signals. I didn't love this short-term retracement to here. It wasn't Goldilocks, Tim. This is Goldilocks if it holds.
Okay. I agree. I mean, you need to have some kind of intraday confirmation and whatnot, but you are now getting that pricing point you were looking at. Old resistance, new support, pull back to the 20. Industrials have had relative strength over these other areas, and Boeing has been the leader in that area. Now, obviously down 3%, you're not going to feel great about it today if you're holding on to a position, but you got to like the depth of that retracement, just not the size of the candlestick, right? I mean, that's the problem. The only red flag with that signal.
Would not be, if the market slows down, would not shock me to see a snapback recovery in Boeing.
Yeah, I agree with that. Let's take a look at Nike. You know, Matt, Nike was a very popular stock.
Just so I don't get misconstrued here, Tim. You would never buy it today.
No, it's not an entry today.
Slow it down. Inside candle, upward movement in price. And if you don't know what an inside candle is, it's a small candle inside the body of the other candle. Yeah. Small candle. Bounce on it like what was my elephant? My elephant was what was his name? Manny the elephant, right? Manny the elephant hits the trap. He's hitting the trap. Wait for that upward movement in price.
I didn't know he had a name. I just knew he had a weight, hitting a trampoline and bouncing. I thought it was the most adorable thing I ever saw in my life. Amazing. You have to play that.
It was the greatest thing I'd ever found in my life. I taught technical analysis at a legacy event for 4 hours one day with the elephant jumping on a tramp. It was fantastic.
I enjoyed it quite a bit. Two more from me, and then you guys can bring in a stock or two if you want. Nike, Matt, down 4.5% today. Biggest loser on the Dow Jones Industrial. We loved Nike there several times, and now you cannot love it here. Obviously, with that break of trend, support, high volatility, red candle. Again, could have a snapback rally like the rest of the market, but that's pretty ugly.
Yeah, there's nothing to see here. There's no trade there.
Home Depot, hurricane, obviously today. One more last reminder, everybody down there in the coast, we're thinking about you. But with the hurricane, Matt, usually a Home Depot type stock can end up doing very, very well in these kinds of conditions. Relatively strong, actually. I know it's a red candle, but it's up on the day.
It's up on the day.
Yeah.
Yeah, it's up on the day. Another one in that capacity is Lowe's here, Tim. Lowe's kind of tiny forming a Snapchat pattern here a little bit. Don't want to get into it, but Lowe's sitting on that 50-day moving average. Lowe's been outperforming Home Depot over the course of the last couple months. So, you know, it's definitely two to keep an eye on as that hurricane comes in.
Yeah. And as we're talking here, we've seen this throughout the halftime report. The NASDAQ has gone down and up and down and up. And now we're pressing 75 or 72.50, I should say.
Told you. Halftime crew. I love you guys.
Bang that 7,200 level, Matt, and it rallied back into 7,250.
Boom.
I agree.
I'm telling you, it's been a really good technique finding that intraday support level. That intraday support level has responded bullish off every day the last 5 days. You know, whenever you say that, and I never know what you're actually thinking. This, you know, in the halftime crew, you'll hear this from Tim. He'll just, whenever I say something or Noah says something or anybody says something, he always says this.
I saw a comment from
I don't know what that means.
I saw a comment from
my analysis.
I saw a comment from Blake at our halftime crew, and I actually mentored Blake and Cecilia, a while back. He said Nike haters are loving it. And
yeah, they are.
I get it. I mean, the people who hate are going to find a way to
hold
hate.
on.
No doubt about it.
But Nike's not going down because Colin Kaepernick. So the haters don't. They're not showing their intelligence here.
Yeah, they don't care though. I mean,
haters gonna hate.
Trolls are going to troll.
Trolls are going to troll.
Yeah. Noah, what are you going to be working on the rest of the day? What are you watching to close this day? Because obviously intraday price action, the close on stocks. Is there any indicator you watch in a condition like this?
Not particularly. I just watch the price action primarily for decision making. My number one concern is I've made some pretty decent money on a hedge. And I'm looking to see if I need to pull that hedge off.
Let's break this down. What's the hedge?
Case of a rally? It's a short on the ES. It's
short on the ES to offset long term.
Yep. And to offset my longer term positions.
Yep.
I
would pull it off right now.
That's my biggest consideration, is pull it off right before the rally so I can lock in the gains. If I get another kiss goodbye, I can always re-enter.
I think now that's just me personally. I think you'll get a retest of the lows at 28.40 in the ES. If it tests the 28.40, I'd pull it off there. If it breaks the intraday channel of 28.50, I'd pull it off there.
Yep, that's about what I'm thinking already. So it's almost like we've been trained by the same masters.
You would think there might be some consistency in that. Yes.
Yeah.
It's like you said one time, Noah, on the podcast. It's almost like this technical stuff works.
Sometimes it does. Sometimes it does until it doesn't.
It does.
Yeah.
All right, guys, we're gonna turn it out at this point. But guys, hope you enjoyed the halftime report for today. Regardless if the market goes up or down, ladies and gentlemen, it does not matter. We're going to be here every single day to help you understand it, help you analyze it, and help you prepare for the market on a daily basis. This is something we decided to do a couple months ago with our community to ensure that you guys have us on a daily basis to help you navigate the financial markets. So thank you so much for everything you bring to the table, guys. We're going to bring it every day as well. We'll see you tomorrow. Bear market survival guide for everybody that has access to that premium system. Yes, we planned this. We had Christian on the halftime report in the podcast. And whenever Christian comes on, markets go down. That's when we do bear market survival guide. Obviously, I'm kidding, Christian. You're an amazing trader in your own right. But that is tonight, bear market survival guide. Tomorrow is the cash flow show. And then on Friday, we have the scatter report meeting for the scatter reports coming out this weekend.
Matt, you know what, when you said that, it kind of caught my brain here for a minute, because we didn't plan the market volatility, obviously, but we did about 2 months ago, maybe 3 months ago. We got together as a team, and you and I, and we had a conversation where we said, listen, guys, we don't know when the market is going to turn. And we don't know when the bear market's going to happen. And I do know, and I'm not panicking today from this market behavior, but we rushed the bear market out there. And we actually said, it's time for us to go out and do this, because we knew that there was some toppy action in the market, Matt. And I think there's a reason why asset managers are rotating out of stocks a little bit here. You have rising interest rates, you have volatility, you have some concern about global markets, and then you're getting all of this chatter about earnings might not come in as high as expected. I think Noah, hedging today is the kind of object lesson of the day. The fact is, when you're a trader, you have to either hedge or position yourself with these bear setups, right?
Absolutely.
All right, guys. Halftime crew, great job.
Real quick. The tackle today, if you guys are not getting the tackle today email, that tackle today email lists out everything we're doing at tackle on a daily basis, the video of the day, the quote of the day, a write-up, and Christian has this write-up on options that is going on in the tackle today email. So make sure you're reading that tackle today email on a daily basis as well.
Yeah, I'll put the link in for that. Great job, Matt. Great job, Noah. Great job, Cody. Good work on the prep. Halftime crew, we will see you tomorrow.
Okay, very quickly, keep an eye on those intraday support levels. We had price appreciation come off that. That doesn't mean it's going to hold throughout the close. Watch that close coming into it. We identified those intraday support and resistance levels. Have a great day trading, and have a great day overall, guys. Stay safe in the South. We're thinking about all of you guys, and we'll see you tomorrow.
Peace.